European banks take a hammering. Profits at UBS, Deutsche, BBVA and Commerzbank tumble, putting the troubled financial sector under even greater strain. I'm Jamie McGeever and this is today's Market Pulse. Well, let's get straight out now to Michael Hewson. He's Senior Strategist at CMC Markets. Michael, pretty dismal earnings for the banks today. UBS is down 5%. Is it going to get any better?
Yeah, good morning, Jamie. No, I don't really see that it can. I mean, you look at the economic data that's coming out of Europe, the global slowdown that we're seeing across the board, and you really have to ask yourself, given the economic outlook going forward, where the banks are going to be able to make their profits. There's a number of key factors weighing on banking sector at the moment, not least the bad press that they're getting for the various scandals, potential litigation, as well as obviously regulatory burdens going forward. So I think the outlook looks pretty uncertain for banks at the moment.
Just looking at a chart here of the European Banking Index, it's obviously lost a lot in the last couple of years. The last couple of months, though, it hasn't really gone anywhere. Is the forward outlook not as bleak as you think it is?
To be quite honest, Jamie, I think with the uncertainty that we're seeing in the banking sector, we may see pockets of volatility here and there. I think if you're looking at the banking sector, it's a trader's market. I certainly don't think it's investable in any way, shape or form, given the regulatory uncertainty on both sides of the pond at the moment. OK, so pretty bleak outlook for the banks. Is there any name or country specifically that you would steer clear of? Well, obviously Europe is a case in point. You look at Spain, you look at Italy. Those banks could well be hit even harder. You've seen BBVA's figures this morning, and a lot of those losses are down to potential loan write-downs. Given the fact that the Spanish economy is contracting, unemployment is rising, and the Spanish Prime Minister last couple of weeks ago announced a further 65 billion euros worth of austerity measures, you're going to have to ask yourself where the growth is going to come from there. So I certainly think the Spanish banking sector is going to have a very rough ride going forward, and that could well translate out and ripple out across the rest of Europe. If you look at Barclays have a significant exposure to not only Spanish markets, but also Spanish corporates and Italian corporates. So, there's a number of key concerns coming out of Europe. Barclays was, up until a month or two ago, one of the relatively successful stories. Any other pockets of value out there? Well, I hesitate to use the words pockets of value because I think a number of analysts have said that, Barclays shares are a fairly good buy at these levels, but that doesn't mean they can't get any cheaper. Let's not forget that there's still potential litigation in the works there. They don't have a CEO, they don't have a COO, and shortly they could be looking for a new chairman. So, there is an uncertainty over there. But if I was going to be looking at banks, I'd certainly be looking at banks with a global footprint. We saw HSBC results the other day. They weren't too bad, notwithstanding obviously the bad press surrounding the money laundering scandal and obviously the mis-selling scandals, and obviously Standard Chartered, who are reporting tomorrow. OK, just to finish up, if you were a banking executive sitting in your boardroom today, what would you be wanting to hear from Mr Draghi on Thursday? Well, what I would be hoping to hear from Mr Draghi is probably something that he can't deliver, and that's unlimited bond buying. But in the absence of that, then maybe another LTRO to, basically tide the banks over going forward. What I wouldn't want to see is another rate cut, because I think rates are already low enough as it is, and I think another rate cut could well impact profitability going forward. So possibly another LTRO. But beyond that, I think it's going to be very, very difficult for the ECB to deliver anything beyond that. OK, Michael, thank you very much. Thank you. Well, on to our technical chart of the day. Mario Draghi's pledge last week to save the euro helped cap Spanish yields, but charts suggest the relief could be short-lived. That's according to Credit Suisse technical analyst David Sneddon.
Despite the sharp move lower so far, which has gone through some retracement levels and some moving average levels, it hasn't extended through what we see as critical resistance, which is 650. And our view is that you need to see 6.5% removed to suggest that we do have a more meaningful top in place for the 10-year Spanish yield, and we can then see a more meaningful risk-on phase.
That's all for now, but do join us at this time each weekday for Market Pulse, a snapshot of what's moving on financial markets and why. I'm Jamie McGeever, this is Reuters.